All right, good afternoon, everyone. Welcome to the Polaris Trading Group's PTG University Educational Workshop Series. This particular workshop, we're going to do a overview of our methodology. We recently had a webinar, and we want to give an opportunity to our guests, as well as a review for our members, what our methodology entails, some of the charts that we look at, how do we come up with our various scenarios and so forth. So today, Wednesday, December 16th, this is Fed Day, where they increased interest rates by 1/4 of a point for the first time in 7-8 years or so. So it begins the cycle of tightening, which, as they stated today, will be very slow and deliberate, based upon data. So let's just work into this. All right, so as you know, industry regulations, clearly have to just highlight the NFA Compliance Rule 229. Many of you are aware of this. Hypothetical performance results have many inherent limitations, and trading in futures and speculative options on futures speculative in nature and involve substantial risk. All right, past performance is not indicative of future results. All right, so with that, let's just go right into it. So some of the topics that we want to just outline for you today is some of the volume profile analysis, price structure that we use. We use what's called the 3-day cycle, and that's given on a day-to-day basis in the daily trade strategy. We'll discuss a little bit about our statistical extreme zones, referred to as StatX. On a day-to-day basis, we have an opening range strategy level that we highlight. That is referred to as the ORRMP, and we highlight that each morning live in the room. We have a few setups that we look for. We'll give you an outline of those. Many of you are familiar with the premium and discount, which is our CCI crossover strategy. Also, that's part of the auto trade components that we have. We have an ATR stop point break shift trade strategy. We demonstrated that a couple days ago. And bull and bear stacker setups, which are trend changing or trend shifting setups. Okay, so what I want to start with here we go. We got a new slide up here. Okay, so every day we start off with our daily trade strategy. Now our guests as well as our members and subscribers receive this each morning prior to the opening. There are a few sections to it. We highlight the general comments about the markets overall. Today was again Fed Day. This was today's email that was sent out. Of course, there's an economic calendar in there, as well as the most important section, and that would be the PTG trading section and the hypotheses for the particular session. So what we're trying to do here is give you an outline of what we believe the market may unfold on any particular day. And so we use what's called the 3-day strategy, 3-day rally. So if you were to click on any one of these links here, so cycle day 2, this will link you to a document. And we won't go through that. This particular 3-day cycle trading strategy is subject for an entire workshop in and of itself. But feel free to link to that. You can certainly copy it. You can print it out for yourselves. All right, and this gives us a template or a guide of the market in terms of where the market moves in cyclical patterns. All right, it ebbs and flows, it expands and contracts, and it does so in particular ways. All right, and though it doesn't do that perfectly every day, there is a rhythm to the market, and we use a 3-day trading cycle to capture that rhythm. So going back to the email every day, all right, you can click on the link there, and that brings up our target master static zone, which we'll show you shortly. And then the next important part is the hypotheses for the day. Now, what this simply outlines is fairly briefly, scenario 1 is a bullish scenario, scenario 2 is a bearish scenario. We don't really know what the market's going to do on a day-to-day basis. We have an idea based on what has recently happened. We can make some inferences about what may occur today based upon past history. And in doing so, we try to map out a scenario that if prices do X, then the expectation or outcome is prices will do Y, will reach Y level. Okay, we very nearly hit 2068 today. Very, very close. What, anybody have the high of the day? I think we were very, very close to that extreme target today. That said, this just begins our template for the day. All right, so I recommend that each of you read it in the morning. You may not understand everything that's there, but what will happen is the more you read it, the more you listen to what we do and the levels that we speak of throughout the day and how the market begins to unfold will give you an idea of what we would be expecting to happen throughout the course of the day. All right, so let me just move that away for the time being. Okay, so we're going to go right to our charts, and as I said, we start off with the larger picture. So as with many strategies and methodologies out there, we do start off with a tops-down approach, and then we drill it down into the details of the intraday trade action. So we always like to make sure we understand where the market is on a larger perspective. Here we got a, just a regular day session chart. All right, daily chart. Very familiar with those patterns. We also now go into some market profiling. Again, the subject of profiling is, again, multiple workshops in and of itself, but we do watch some of the key levels, how the value area highs, lows, high volume node relate to one another on a day-to-day basis. Again, we spoke about the 3-day cycle. There's a magenta little zone here, and we'll look at that a little bit closer as well. There's a magenta zone. That's a 3-day central pivot zone. What simply that is everybody's familiar with the daily central pivot. High-low close divided by 3. Well, what we do is we take that pivot, we also take the midpoint of the session, which is the 50% point, which is typically a different calculation than the pivot point for the day. And we do a little mathematical gymnastics and we create a zone. And that is for a 1-day period. And what the 3-day central pivot zone is, a rolling 3-day central pivot. Now, why is that important? It corresponds to the 3-day cycle very nicely, number one. Number two, many institutions that I used to do business for and with when I worked for the investment banks use a 3-day central pivot zone. Not many people out there do. So it's very interesting how when certain price structures come together, the 3-day central pivot zone really is a help in determining if the structure is bullish or bearish, or if it's transitioning. All right, so we start off with the larger profile there, and then what we'll do is we drill down. Now, many of you are very familiar with various forms of market profile, volume profiling, and again, subject for a different webinar. But we also use that as well. So what we're doing is we're taking all the information from the various sources that are available to us to come up with a synopsis of what the market is doing, where are the high inflection points, where are the key zones, et cetera, et cetera. We put that in together where we're building a ongoing picture, kind of a never-ending picture of the market's dynamics, and we're putting that together. Now, again, how we do that, you begin to learn more and more as our members have, spending time, with us as a member. But many of you are familiar with market profiles, so that is part of what we do. The software that you see, by the way, the Sierra Chart platform, and everything we have created on the platform that we use for our tool set is available to our members. Everything is pre-templated, by the way. All right, so there's nothing here that you need to kind of create on your own. It's all created for you, and it's really, you'll see up at the top here it says PTG Trading Room, AT for active trader, and this is the same template that all our members use. So we're all on the same page. Nobody's using different templates, trying to figure out what we're doing, and they don't have the same charts, and it can get very confusing. We're all on the same page each and every day, so it's really important that that we are all on the same page. Okay. Now, once we get from the larger picture down to some of the profiling, again, which is another view of the larger picture, all right, we start drilling it down, and this is where we get into some of our particulars. Okay, so this particular chart here, and again, many of you will be familiar with it from the daily trade strategy. The next chart that comes up here is our 60-minute target master stat X zone. So what this does is a few components to that. Of course, you see the profile on the left. The larger profile is a 5-day rolling profile, and then you have the current day session or 24-hour session profile here. All right. Now, a couple of components to this. I did mention the 3-day central pivot zone already, which is that magenta area there, and as you can see here, clearly that price has been descending down over this past week. Now, what's important to look at is on that particular part of our indicator is where the price shifts. All right, so the price came down here. Let me just move this out of the way. Back on the 7th of December, and penetrated down through these 3-day central pivot zones that you see here. Once we got a penetration, all right, we're looking for resistance back up when we get bounces. So as you can see here, we had a little resistance in this area, another set of resistance in this area on this particular day where it bounced up. Yeah, everybody thought it was, that was a real bullish move, but in actuality, it was a bounce for the large institutional player, all right, to sell into. Now, I mentioned earlier that the large institutions use this particular zone. Many people are not aware of that. I learned that they use this zone from them when I was working for the investment banks. All right, so it's actually I've incorporated it into our work, and it again dovetails very nicely with the 3-day cycle that we use as well. So that's an area where we want to pay attention to during the day. We're expecting reversals from that point. All right, the level also becomes a target first, and then a reversal second. You'll also see the following day where again another bounce attempt occurred and created an opportunity to sell within the context of that zone. Now, one thing I want to keep in mind, it looks great on a 60-minute chart. In hindsight, we could be heroes and say, yeah, wow, that was a great sell. All right, we shorted them there for sure. What we do is we understand where that zone is taking place, and then when we drill down into our shorter time frame charts and execution charts, all right, we look for evidence of reversals from that zone. Okay, intraday. Again, these are 60-minute bars, so there's a lot of activity that takes place within the context of those zones. But what we are anticipating is a reversal from that zone. Okay, and so that's, we use it as the bigger picture, and then we drill down into the execution charts. Okay, but one thing to keep in mind, they are very important zones. All right, and we don't use moving averages on this chart. We're just using price structure. And again, what you want to key takeaway of that particular indicator that we use is that the institutions use it. Okay, it's not that difficult to calculate. Many of you are experienced coders yourself. You can create it. All right. Now the second part of this particular chart here is the blue X's. The blue X's represent statistical extremes. That's why we refer to them as stat X. And they really are a confluence of multiple levels. So the market has symmetry to it. It has balance to it. It may not seem that way at times, but it does in terms of how the ranges take place. And so what we tend to do is we have a pivot point, okay, and we use the daily pivot, and you can see this yellow zone right in here. All right, that is that particular session's daily pivot. And what we do is we there's a proprietary calculation that we use to identify what those stat X zones are. And again, I won't get into the details of that, but as you'll see, every day that they have 4 particular zones, 2 inner zones, all right, which kind of refers to as the intra minor zones, and then the extreme zones, which tends to at many times offer reversal trade opportunities, and it is representative of an extreme part of a range extension. Okay, now the third and last component is what we refer to as the target master. Now what the target master, and this is this red and green where you see it says breakout level 1, breakout target, and so forth here to the upside and to the downside. Again, we use a pivot point, and then we calculate range parameters. Okay, and what we do here is we normalize a 3-day range. So again, everything is tied around this 3-day cycle. Okay, and so what we do on that particular indicator, and it is different calculations, it's an entirely different approach of calculating range and so forth, but it's mapped out on our chart every evening at 6 p.m. Eastern Time for the following day. All right, so if you have the software, you can actually make plans, of what potentially the next day's range is going to be. And I do use quite a bit of this in our daily trade strategy. Okay, so what was the high of the day here today? What did we get to? We got to 68.75. Is that correct with everybody? 68.75. What did we have for our extreme target for the day? 2068.50. How's that? Pretty good? All right, so we hit our target, and again, I wrote out this at about 7 o'clock in the morning. But what I do is, I take a look at prior day's extremes, what the potential range is for the day, what type of day type that we have working for us, and then this is already laid out for us in advance. All right, so that's the stat X zone, and this is an important chart because this really maps out the idea of where key levels are, resistance, support, where buying is expected to come in. When you take these particular zones and levels and you overlay them with the market profile, okay, it begins to form one heck of a picture. When you're looking at the market profile, you don't understand, it doesn't tell you, yes, there's high volume there, there's low volume there, there's a high volume node over here, etc., etc. But that's pretty much all it gives you. Yes, there's the value area high, low, but it doesn't tell you anything about how the ebb and flow of the market is proceeding on a day-to-day basis. Okay, the 3-day cycle is one from which we can actually project what may happen the next day based on what part of the cycle that we're on, and have some confidence on if we're expecting that the market is going to rally on a particular day, then we're looking for evidence of that. All right, and again, we don't want to trade our own personal biases, but rather the market biases. If the market biases are showing us that there's some bullish sentiment going on underneath price action and within the day, then that scenario one, which is our bullish scenario, has greater weight in terms of outcomes. So today, what we said was if price clears and converts the prior day's high, which was at 45.75, then the initial target was 20.50. And again, so understand, so 45.75, so that's right about here. And then the initial target was 20.50. So notice what happened here during the day. What was the high edge of the volume here? Right around that 20.50, within a margin of error, 20.50. Above that level, measured 54, so that we actually got to 54. Didn't really spend much time there, but by that time the market had begun to rally pretty significantly, right? And then beyond 54, there was a minor level at 57, and then 66.75, which was the range breakout projection, and then the 68.50s, and the high of the day is 68.75s. All right, so all this was given to us in advance, and it helps us map out the day. All right, so that's, again, a very important chart for us on a day-to-day basis, and I provide that particular chart within the context of the daily trade strategy. All right, let's moving along. So where do we go from our 60-minute chart? Okay, before we get to our execution charts, we want to narrow it down. All right, and look at, now many of you are familiar with market profile, the various components of market profile. So what we've done there is we've taken some of the more important parts of market profile. Let me just open this up, and offered an opportunity to put it on a 5-minute chart. Now there is a lot of information on this particular chart. All right, but don't get too crazed about that. What you will see though is you'll see labeling here on the right hand side, and we want to make sure that we're labeled on everything so we understand what we're looking at. Now, is everybody familiar with the initial balance, high or low? Okay, that's the first hourly high or low. Very important initial range for the day for large institutions. So we map it out. Here's initial balance high, here's initial balance low, and then what's called the IBMP, which is the initial balance midpoint. We also look at our opening range. Okay, so every day in our trading room we look at and we highlight the opening range average midpoint, which is our first 5-minute average of the day. So simply what that does here, guys, is you take the first 5-minute bar of the day, and it's the midpoint of it. Very simple. It's not the opening price, but it's the 5-minute average. Okay, so that's and that is our first sentiment marker for the day. All right, so we have a gap up here on this particular day. Price did not, continue the gap. So a lot of people think that, hey, we got a gap up, where I want to buy them, it's bullish, right? Well, yeah, it is a bullish gap. But what we focus on every day is how does price act versus that opening range midpoint, which is our first, what we refer to it as our bull-bear line in the sand on the opening. Okay, so if this bullish gap up was very bullish, we would not see price trade back down below it significantly. As a matter of fact, what we would see is any pullback in price, there would be increased buying interest, and then ultimately the price would trade much higher. And what we have here is targets from which we can look to use. Okay, so there's upside targets, downside targets. Now, a day like today, what happened is on the 5-minute average, it traded below, and we never got any real buying interest on that gap. What that tends to happen is the prices tend to come back and retest the prior day's close. So we ended up having a close of the gap. But that closing of the gap held nicely, all right, and throughout the day. Now, again, levels that we want to be aware of is we have a daily central pivot here. This is that yellow zone. And again, we have actually in our membership, we did a workshop and we actually broke down this particular chart. All right, so there's a lot of levels on here that go beyond this outline presentation, but it is a very important chart for us to understand where key levels are. And many times you'll see me during the day bring in this particular chart from another window and identify, why we're interested in a particular level. What is the significance of a particular zone? And I say it to make sure that our members are prepared. They understand why we're looking to buy, why we're looking to sell, and so they understand, and it gives them, if you understand something, all right, doesn't it give you more confidence to take a signal if you have some core understanding of what you're looking at and what you're looking for? If somebody is just there telling you buy it and sell it and buy it and sell it, you have to have a tremendous amount of faith in that particular individual. Okay, and although our members certainly trust in me, what I want to do is not just simply call out trades, but rather here, this is what we want to do and why. And then we let the computer give us our signals. Now you'll see some arrows on the chart here, these white arrows and these magenta, the cyanic color arrows within here. Now many of you are familiar with this. These are discount signals. Okay, so this is what we want to do is we want to look to buy pullbacks within the context of developing strength. That's the core aspect of our discount premium signal, is these signals here give us statistical relationships in price, and it's suggestive of that a price may be at a low statistical point, and it's up to us through our education and knowledge and execution to understand whether or not that is a discount from which we want to look to take a buy setup. And again, that's all goes deep into our education. But it is representative on our charts, and when I see that, whether it's on a 5-minute chart, whether it's on a 750 execution chart or a different another chart, I pay attention to it, and because that is the point from which the mathematics is coming together to offer us a potential good risk to reward trade opportunity. Okay, so it's important that we understand why we're looking for that trade, and the computer generates the signal. All right, so as part of the membership and learning of what we do, I want to build confidence in you to understand why each one of these signals, as it appears on the charts, why would we want to be looking to take the trade? Why would we want to be looking not to take the trade? It's just as important to understand why not to as it is to. All right. Again, that comes with exposure, experience, practice, all right, and of course, a certain level of knowledge. All right. The trade setups, by the way, I just want to make a note about those. Trade setups are just setups. I mean, they're not necessarily the reason why we get into a trade, but rather it's the relationship in terms of price and the signal from which to offer us an opportunity to get into a trade, again, with a relatively good reward risk ratio. But it's not necessarily the reason to get into the trade. We need to have other aspects of understanding of market structure and what's happening in the market dynamically to come up with a formulate a plan to say, yes, we want to be on the buy side here at this particular juncture in the session, and I'm looking for those signals that will help me get into that particular setup, okay, or in agreement with what we're looking at, buy side, sell side. So clearly today was the buy side. Again, on this way down, we had a couple small sell signals. I didn't take them. We waited for the market to base out here. We were really looking for a good base around these 38s, 40s, and we got it. We eventually got it. And of course, Fed Day here really provided a great opportunity. So on the 5-minute chart, all right, now with our software, it's really easy to, many of you are familiar with the quote board. It's very easy to just click on, like if we wanted to take a look at NASDAQ, click on the quote board, and with the chart linking feature that's built into Sierra Chart, okay, we can look clearly at, if we wanted to take a look at NASDAQ, okay, again, what it does is it auto-calculates all the various levels and the 60-minute chart here on the left-hand side. So you have an immediate picture of the key component levels that we spoke of earlier on the StatX chart, as well as the key intraday levels that are generated on the 5-minute chart. Now, many of these levels are not shown on our execution chart simply because the chart would be illegible. There would be so many lines and crosses and so forth that it would be almost impossible to distinguish what price point. So what we like to do is, and it's all, of course, best if you have multiple monitors, to be able to look at these particular charts, at a glance. We're not staring at 5-minute charts all day long. We do focus primarily on some of the execution charts intraday, because that's where we're doing most of our trading off of and looking for trigger signals and setups. But we need to pay attention to the bigger picture quite a bit, and I make sure that I remind our traders to at times take a look at that bigger picture, because it is extremely important that we do so. All right, so same thing with Russell. You can just click over to Russell, or YM if you're a YM trader. Okay, we can go right back here to S&P. So again, all set up for you. You do not need to make any adjustments to these charts. What you need to do, though, as part of your education, is study them, understand what they represent, and I'm always here for our members to to help with that. Okay, so this is, by the way, this is a 5-minute day session chart only, not a 24-hour. And then now let me just proceed a little bit further here, and some of the other alternative charts that we look at is, this one can be a little messy at times, but this is a 4,500 tick chart, and this is a 24-hour chart. So now you start seeing things that are a little bit more familiar, such as our CCI and our wave volume histogram down below. But what I use the 4,500 tick chart for is looking for symmetrical structure. Okay, symmetry in swings. So there's the thick green and red, that's the larger degree swing, and then we have a minor degree swing with the white lines here. And again, similarity or likeness in swing. So for instance, all right, we have a move in this particular pullback here, right, as you can see, 8 points. All right, so from this particular high, we would be looking for a pullback of approximately 8 points. And then we would be, at that point, we would be looking for potential for support or buying interest to come in. So it's very important that we understand kind of the symmetry. We did an entire workshop on symmetry not too long ago, and using these the zigzag wave structure and it's really important. So this is a particular chart that we use for that. All right, and again, occasionally I'll bring it into the room, I'll show it, and then for everyone. All right, but it's a 4500 tick chart is very similar to a 5-minute chart, but as you can see, there's not, there's much less going on in terms of all the labeling and levels and so forth, because again, I'm a big proponent in whatever's on a chart, make sure that that's what you want to see on that particular chart. You don't want to have too many things on a chart, because then again, it becomes illegible. And so always use, set up your charts the way they're intended for. All right, so what we're doing here is we're drilling down from a larger macro picture to an intermediate, to an intraday, to the 5-minute, 4500, and now we start drilling down to some charts that are a little bit more familiar to you on an intraday basis. All right, and that clearly is our, we come down into our execution charts. Okay, so this particular chart here is a 1500 tick. So we go from 4500 to 1500, and then from 1500 down to 750, which is primarily our lowest size tick chart. Now, some people use range charts in our membership. Range charts work very nicely with what we do. I don't use Renko charts. I'm not that familiar with Renko. I know what they are. They're more like a point and figure, but we don't really use them. Primarily range and tick charts seem to work much best for what we're looking for. So what you see here on this particular chart, I mentioned the opening range average, so there's that cyan line. So a lot of these charts, we have the ability through the magic of the Sierra chart platform to overlay levels, overlay actually levels from other charts, and which is a real benefit, because we're able to pull information from other charts here, and it's called the price study overlay. And as you can see here on the right hand side, there's a session high. We have 3 different ATR lines there. Now again, once you get accustomed to looking at the chart and what we're looking at and looking for, they don't seem as busy. To some of you, they may seem fairly busy. But again, today's presentation is more of an outline of what you'll get as if you decide to join up with us. And again, let me just make one huge important point. It may seem like a lot of stuff, and some of you may be sitting there wondering, boy, this is just overwhelming. It really isn't. All right. With anything, you need to take time and learn step by step, what a particular chart is, represents, what we're looking for, and like the target master stat X zone chart there on the left. Once you get an understanding of what it represents, right, it doesn't become messy anymore. It doesn't become busy. It doesn't become overwhelming. It actually becomes very helpful. Same thing with that balance chart. We refer to that 5-minute chart as our balance chart. A lot of information on there. Once you get an understanding of each of the components that make up the balance chart, by the way, which we have a member workshop on, where we actually take that balance chart and we build it. We take a blank chart, 5-minute chart, and we actually build each of the components of what you see on that particular chart. And in doing so, we speak about what it represents, what this indicator represents, what do we use it for, et cetera, et cetera. So once you get an understanding of this stuff, it does become much easier. So if you feel as though, oh my God, you're really just overwhelmed here, all right, don't be, because as a matter of fact, what you see on this particular chart here, for instance, you'll see the exact same stuff on the 750. You'll see the exact same stuff if you were trading NASDAQ. You'll see the exact same indicators if you were trading crude oil. Okay, so the interesting part about this is that all the components that are on the chart are the same for any instrument that you want to trade. If you're a DAX trader, if you're Euro Trader, whatever your fancy is. All right, Russell 2000. Everything here is uniform and universal for many different instruments. So the idea is once you learn the instruments, the various indicators, they become much more useful for you on a day-to-day basis. But here you'll see, of course, our trademark premium and discounts signals here. And again, they represent, in an uptrend here, all right, and this was a pretty big uptrend today with the Fed. A pullback. We're looking for levels and opportunities from which to take long trades from. Okay, and again, waiting for price to come back down within the context of fair value. Now, this shaded area here is what we refer to as our fair value zone. Okay, now that's different than a fair value zone representative on a market profile type basis. But it is what we call our fair value zone, and what we like to do is we like to buy discounts, which again, a discount is a pullback within the context of an uptrend. We like to buy discounts in strengthening conditions. So certainly today was strengthening conditions throughout the day, right? Okay, so with that, we're looking for signals that will help us get in agreement with this trend up direction today. Okay, and the question is, everybody knows, hey, I want to buy a pullback within the context of an uptrend. Everybody knows that, right? The problem is, where do I buy it? At what point is it safe to buy it? All right, because a lot of people, they buy a pullback, but they don't understand where the pullback will potentially end. All right, and so many people, traders, tend to buy it too early. They have a tight stop, and then it gets stopped out prematurely, only to be very, very close to the low or entry point where they get stopped out. And it can be very frustrating for all of us. We've all been there. What our CCI premium and discounts signals are for us, it gives us a statistical representation of where price has pulled back deep enough, all right, for an opportunity where the reward risk ratio begins to favor long side trades in the case of a discount within the context of an up move as it was today. So then it offers prices from which we can start building a position, one contract, two contracts, etc. Right, for the next move higher. Okay, so let's just move on, and we'll just drill down into the 750. Oh, but before I do, you'll see that the ATR lines, and they're labeled here, ATR bull 750, ATR, in this case a bear 750, then you'll see ATR bull 1500. What this represents here, the ATR bull 1500, and then you'll see the fatter line here, it says ATR bull 4500. What we're doing is, and these are very important structure lines for us that we use. What we're actually doing here is we're taking the ATR line from a 750 tick chart and overlaying it on a 1500 tick chart. We're taking a ATR line from a 4500 tick chart, overlaying it on a 1500 tick chart. So what this really is helpful, although it looks somewhat busy, it actually is very helpful, because if you're somebody that wants to just look at a 1500 tick chart primarily, okay, you get the benefit of seeing where the structure lines are running from the other charts, from the next larger degree, 4500, and the next smaller degree, 750. So it can be a real benefit to see how these are unfolding, as opposed to jumping from chart to chart to chart. Okay, so here let me drill down into the 750. Let me open it up a little bit. Okay, And so what you'll see here on the 750, now this is our core chart. Everybody should be familiar with this that we look at. What you're seeing here, again, same fair value zone. Okay, the white line here is the 750 ATR bull line, average true range bull line. And then the blue one is the 1500. And then this salmon color one is the 4500. So again, using a 750 tick chart, I know where the key structure points for the next higher degree, 1500, and the next one above that, 4500. So as you can see here, though the day is closed and finished, you can see here this pullback in price targeted. This becomes a target down here at the ATR Bull 4500. Okay. Also, you can see here some traditional lines. Okay, the volume trend here, that's this white line here. This is a 24-hour VWAP, volume weighted average price, 24 hours. So we just simply call it the volume trend. And of course, many of you are familiar with the terminology of upper value area and lower value area. Well, we didn't denote these as D UVA. So what that means is developing upper value area for the day session. Now, of course, once it's complete, it's set in place. And then we measure 2 standard deviations. You can see it right here, 2 SD, and then 3 standard deviations, 3 SD. So you can see clearly here at 2068.60, price was 3 standard deviations, okay, away from the volume weighted average price. Pretty extreme. All right, statistically speaking, on a bell curve, all right, that is an extreme reading. So it also matched very nicely, by the way, with our target for the day, which was 2068.50 today. All right, and look at that, 2068.75, 2068.50 worked nicely. So going back to the beginning where we map out the day, all right, when the scenario is playing out for us, we have there's no guarantee that price is going to reach 68.50, but if somebody was to ask me during the day, what's the potential for price? Where could it go? I'd say 68.50 in the way the day was unfolding, simply because that's I had estimated or measured out that particular price target not in the heat of battle, right? Not while I'm trading or if I have a position on, but actually in a calm state, and I'm analyzing the price structure and so forth, and so then I pass that along to everybody. All right, and then with these signals, by the way, okay, so again, everybody should be a little bit familiar with the auto trade, the ATA up here in the top left. Okay, I'm not going to get into that right now because we did the webinar on that, and our members have workshops on it. All right, but again, we're going to be utilizing that, more and more on a day-to-day basis, as necessary. We don't just automatically turn it on all the time, but it is useful, on particular days and when we want to, help, need some assistance to get into a trade. Okay, but the setups that are generated, the premium and the discounts, as you'll see here, all historical labeling here, are generated automatically, throughout the course of the day, and again, we need to make an assessment at the time of whether or not we want to take, those particular trades. All right, and again, that's all part of getting an understanding of when to do it. We walk through, entry techniques, okay, with our membership and so forth. So again, a lot of this stuff is really just laid out in the members area. In fairly good detail as well. One last part of the software that's really important that kind of fits in, all right, is we've created what we call a Scanalyzer dashboard, all right, and what this does is it monitors multiple instruments on multiple time frames or tick sizes, a particular bar type. So you'll see here 200 tick, 750 tick, 1500, 4500. NASDAQ, Russell, YM, okay, as well as crude oil. And so what I want to do is I want to monitor multiple instruments for signals. And many of you have expressed to me that it's difficult at times to sit there and watch and stare at, multiple charts and, feel as though you're able to, get the signals. This particular piece of software that we created, custom software, does all the heavy lifting of work for us. It will scan throughout the entire database for our specific setups. Okay, so it'll give us our last and net change, standard stuff. It will scan whether or not that particular bar type, 200 tick or 750, if it's in an uptrend or a downtrend. So if you're always wondering, is it an uptrend or a downtrend, the Scanalyzer will give us that information. It'll also tell us what the structure of the ATR is, whether it's a bullish structure or a bearish structure. So if it's red, of course, it's bearish, green for bullish. And then our trade setups, which we don't have time to discuss today in terms of detail, but it scans for what we call our bull and bear stackers. And a stacker is the beginning of a bullish trend up or a bearish trend down, but it also maintains the validity of that trend until such a time where it shifts. So you'll see here that in crude oil we have a bull stacker, so it'll say bull. There's an audio alert to this as well. Bear stacker when it's beginning to shift. All right, so we want to be alerted to the fact that, hey, the bullish condition is now in the process of shifting to a bearish condition. That may be a good time to look for a short, certainly a good time to get out of a prior long. All right, we want to be alerted to that. And or if you're just, let's just say you're trading S&P and you're not looking at crude oil, for instance, but you are interested in that, the Scanalyzer will scan it for you, give you an alert, and then you can just switch over to that chart and determine whether or not you want to, if the opportunity there presented is, worthy of closer consideration. All right. Premium discount and then a turbo premium and discount, same category. It'll scan for here, and then ultimately the last setup that we have in our arsenal is what we call our 200 extremes. And again, those can be really good reversal points, all right, when taken within the context of everything that we do. All right, so this is all part of what you get, and it's all, and again, there's a lot of information, but what I've designed our software to do for us, and the way our methodology unfolds, is I let the computer do a lot of the work for us, find us the trade setups. That allows us to focus, more intently on a particular instrument, what's happening within the context of that, price action. Is it something that we want to, get involved in at that point in time? And so it allows us to relax during the day, not be uptight, and because we're looking here and looking there, but we want to really look. I can look at one chart here on the 750 and know exactly what's happening on a 1500 tick, or what the structure level is on a 4500, the next level up. I've also, down below here, you'll see this is what we call our trender. All right, so our trender tells us what the condition of the trend is on a particular chart type. So as you see here, it says a 4500. What I've done is I've pulled in from the 4500 chart what the primary trend of the 4500 is. So if I'm looking on a 750 and I'm in a corrective mode here, a pullback mode, this could be a good shorting opportunity at that instance, right, on the 750. But I understand this, sell-off could be nothing but a pullback within the context of a larger uptrend. So again, I want to be aware of what the next larger time frame is for what the trend condition. So it's important to understand that. So again, bringing in information that is useful for us. Okay, and then the last thing I just want to bring across. This is many of you have expressed greater interest in using what's called footprint charts, or Sierra chart refers to as number bars. And again, I've customized this to show specific information. And again, in our workshops, I've done an entire webinar and workshop for our members on the number bars, how to read them, the differences in the colors, dominance versus non-dominance. And as you can see here, some of the labeling, again, I bring in as reference, what is the ATR value on the 750, what's the ATR value on the 1500, what's the ATR value here, and then upper and lower value areas here. Let me just scrunch it up a little bit. Okay, upper, lower value areas. So again, important information that if I'm looking at this particular volume chart, okay, for some detailed information of what's happening in order flow, then I understand what level that order flow is occurring at without having to look at, again, 7 different charts, but rather I can bring in the information from a prior chart if I happen to be focusing on this particular chart here at any moment during the session. And then there's just simply some statistical information about the overall cumulative volume of the day, what the daily range was. Today's daily range was 37.75 for the day, pretty big range. For the week, it's 85 handles for the week, pretty wide range as well. And then some activity down at below here related to large contract traders, 50 contracts, 100 contracts or more, what the net cumulative data is on that. All right, so this pretty rounds out what I wanted to accomplish today, to give you an idea, an overview of some of the other type of charts that we look at. During the trading session right now, it is very difficult to show all these charts at the same time. Hopefully, early next year, in January, there's an update with our internet provider here for our trading room that will allow us to perhaps see some additional screens, and hopefully that will be ready for us sometime mid-January. But until then, we primarily, will look at either a 1500 tick chart. We'll look, certainly I'll bring in that target master StatX zone. All right. Again, our members that have the software have all the exact same workspace on their desktop. So generally, from what I am showing in the trading room, becomes more reference of what we're looking at rather than all the details of every particular chart. So our members get, can use the chart template how they want, but when I do reference a specific chart or level, they know where to be looking at. And again, we're all looking and using the same charts, and that's important because people have told me in the past, this person is using that one, somebody else is using something else, and they're lost. All right. What I want to do is I want to make our entire group focusing on the same type of information, so we're all talking the same language equally. All right. So this will conclude the presentation for the methodology overview. Hopefully it's been informative. Does anybody have any particular questions you'd like to ask of me? I'll be happy to answer what you have. If not, we can conclude. But definitely this is a good time for you guys, especially our guests, to ask away. But maybe I've been very comprehensive here, and you don't have any questions. So that's fine too. All right. No questions? All right. Okay, well, then I hope it's been informative. And it will be recorded, as I mentioned, so if you, again, you'll be able to take a look at this, 24/7. All right. So with that, we've hit our hour just to the tick, and as I promised, we would be within that hour period. And we'll conclude here. And thank you very much for your attention, and hope it's been informative and helpful for you. We'll see everybody in the next trading session tomorrow. All right. So have a great evening, everybody, and enjoy.